you do need to incentivize the right behaviors. Like what you're trying to do is drive the right behaviors that you believe ultimately drive the results of the business. I just want something simple. There is no comp plan I've seen that's going to magically transform your business. There's no comp tool that's going to magically transform your business.
Hello and welcome everyone to another episode of the Cheat Code and Friends podcast, joined by Justin Gray and Sean Kester. Gentlemen, how are we today?
Great.
It's late in the afternoon, Josh. This is like, 9 p.m. for me. So I've got to get the energy up.
We're recording late. I've already crushed a cup of coffee beforehand to get the juices flowing.
Like your normal
today
morning,
we're
though.
Yeah, I know. I'm okay with the morning. I'm a morning guy. Well, today we are joined by Mark Schopmeyer, who is the founder CEO of CaptivateIQ. Mark, we're excited to have you on the show today to talk a little bit about one of our favorite topics, which is incentive compensation. Thanks for joining the show.
Thanks for having me. It's a very timely conversation. Around this time of the year, I get a lot of questions around how to think about compensation for next year.
I wonder why that is. Budgeting season have anything to do with it?
Maybe. There might be some budgeting cycles coming up that might be coming up.
Well, I saw that you just released a state of the union, so to speak, in incentive comp. So I imagine there's a lot of data points that we can jump into there. But, Justin, Sean, and I, being go-to-market operators in the portfolio that we invest in, get into this conversation quite heavily. And one of the things that comes up a lot is we're helping early stage organizations make that transition from founder-led sales to what we like to call the founding AE. So bringing in that first person that's going to be selling on behalf of the company outside of just the founder and maybe a product person or a CTO or something like that. So I want to get your take, one, on the founding AE concept. We love it. And how would you think about compensating such an individual?
Yeah, for sure.
Or any individual.
Yeah, for sure.
Yeah, but I like this concept. Let's stick with the founding AE first because it comes up a lot.
Yeah, for sure. Put in like disclosures. If there's anything I've learned working with startups and early stage companies and early stage founders, there's no correct way to do it. There's just a lot of methods to the madness. And I think founding AEs is no different. Oftentimes what I see people doing is, I think if there is one thing to avoid, I do think some people copy paste a lot of what they hear out there from like maybe a Salesforce or whatever. They think of that as a bellwether and say, hey, like whatever works for them should work for us. And I think that's one of the biggest dangers is incentive compensation is supposed to be tailored to behaviors, or even your first AE. It's, I'm going to copy what somebody else did and think that's the right answer for the business. So if there's anything I can at least say of what not to do is, try not to copy the test answers, so to speak. But I do think a lot of the beginning journey is really searching for repeatability, searching for that product market fit. If you're to start off, like, what does it look like for a good DNA for a founding AE? It's someone, I know this term, I don't know if it's still used nowadays, but back in the day, call it 5-10 years ago, there used to be this concept of like a ninja, someone who's pretty broad, super high IQ, smart. I do think that's still very, very relevant. The people I see get stuck in the mud are the people who are like, look, I did this here and we're going to do it here. And then when the results don't match up, which they rarely do because it's a different business model, product market fits really early, they just get really stuck. Whereas the folks who are very dynamic and they're asking the right questions through curiosity, they're being like, quote unquote, a ninja and being, just solution minded. That's when they start to say, okay, what if we tried this? What if we tried that? And then they start to bring in some semblance of a repeatable motion. There's a quote that I think is very fitting here that I would borrow from one of our earliest investors, Y Combinator, which was, do things that don't scale. And why that may sound kind of crazy is because, like, well, the whole point of a startup and a business that you're building is to scale things at some point. Yes, but let's not get ahead of ourselves. We do need to find what that journey looks like. And so doing things that don't scale is basically saying permission to go do creative things to figure out what gets this in the right hands for folks, what gets you those learnings, those reps, to figure out what we got to do next. That's why compensation, I usually tell people, don't overthink it. And maybe it might not even be the right thing to do right when you find your first founding AE. Sometimes overthinking that actually creates more chaos because nothing's repeatable yet. Like, what you're trying to do is drive the right behaviors that you believe ultimately drive the results of the business. But if it's so early and you're searching for methods to the madness, like, putting that stuff down only adds more friction and can paralyze you. That's not to say you can't have some general rewards, but I would say the more basic, the more rooted in, look, we're going to go with discovery, signals, then stage progression, the easier it becomes until, hey, we've got a good motion. We've got one customer, then we've got 5 customers. You know what? Now we've got something of a semblance that we can kind of dial in. And that's when you can start to put together more of a founding or foundation of a comp.
I think the interesting thing there, so a couple concepts. So, like, number one, the ironic thing is I literally spent the first 6 hours today helping one of our board codes design a comp plan. And the thing that I hear over and over again, and this is predominantly from the founder, is I just want something simple. And yes, like, simplicity is critical for all the points that you mentioned, right? Like, you don't have any repeatability. Like, you should be fostering things like relationship building and getting the customer what they want and doing the hard thing. I think the key aspect that organizations can't forget in that process, though, is, like, you do need to incentivize the right behaviors. And so, like, what that looks like very tangibly is, like, I don't know what this is, guys, but, like, we've run into this, like, a handful of times lately, this exact scenario where it's just like, hey, we sell the solution. I'm going to give the rep the first month of whatever that solution is, right? It's like, right. That checks the box for comp. Yes, you are rewarding them, but, like, is that in line with the strategic goals of your business? You want to keep that customer, right? Like, you want to onboard the right types of customers. And so I think that's where the balance comes in. It's not, for me, it's not never giving up simplicity, because people need to understand it. They need to wrap their arms around it. They need to care about it. But if you really get behind what is the business trying to do, I think, we're talking about sales, but, like, variable comp across the board is such a powerful tool to doing that. I'm curious to, I know, and maybe we should even rewind a bit on why, why Captivate and why this is a good space for you. But I'm also curious as a follow on, like, what, for organizations that really do get this right, like, I would imagine there's just an outsized impact there. Like, where have you seen that? Like, most interesting story that's not sales related.
Yeah, and see if I can play back your question. Is your question, like, where in general in the world of incentive compensation, where is it done well, and where do I see that? Why have companies certain, like, cracked the code and made it really a powerful lever?
Yeah, sure.
I'd say there's a nuance. So I've been at this journey for a number of years, and I would probably have a different answer 4 years, 5 years ago in our early stage. And something I tell when I go to, like, dinners is this, because I hear this question, like, do you have a secret comp plan that's, like, magical? I'm going to give you kind of, like, just, like, shooting it straight from the hip, a real perspective. There is no comp plan I've seen that's going to magically transform your business. There's no comp tool that's going to magically transform your business. I see these things as a dimension in part of a multi-dimensional approach for how you want to build an org, how you want to build a culture. So said another way, I've never seen one singular thing be like, oh yeah, now the company's just ripping because they just put in a system or they put in a really powerful comp plan. What I see is it starts with leadership at the top. What is the view? What is our visibility? Or not visibility. What is our belief system for the next 6 months in 1 year that we want to go do together. We want to set the right strategic direction. We want to have connected tissue to the front lines. We want them to be empowered to make decisions, et cetera, et cetera. We want to have a transparent system where people can see how they're getting paid, and we're focusing on making sure they're focusing on the right activities, and there's implicit trust. That's part of this vision. We want people to feel rewarded for the hard work that they're spending time, and even more rewarded for the strategy that we're putting in place, the enablement program that we're putting in place that unlocks that. So where I see, and there's like a laundry list that goes behind it, you can kind of see what I mean. I see the companies where I see transform and just rip is when a leader comes in and says, I have an operating system. Here's what our AE profile is going to look like. Here's how we're going to hire. We're going to screen against these characteristics. Here's what we're going to enable on the things that we can't just hire around, but we're going to make sure that they're doing the right thing. Here's our leadership coaching. Here is the comp plan that is going to make people feel rewarded. And oh, by the way, we're going to make it feel even more rewarded when they get past quota around the behaviors that we care about. And then here's our overall strategic alignment, leadership down to the bottom level of how we're going to go all do this together in this cohesive vision. When that's done well, that's powerful. If you're an AE, you're like, I want to become part of that org. This is an org where we're all working together to go solve problems together. I'm going to be rewarded. I'm going to see my comp plan. I've got leadership behind my, supporting me and has my back to help me go win the deals in front of me. All these things I've seen time and time again. When that's put together, that's when there's a home run. So I'd say going back, like all these one pieces individually are not going to do it. Just like there's not one singular enablement program that's going to kill it. But when someone comes in with this collective vision and where we want to go as an org, that's when the magic happens.
Is that vision, there's a couple of ways I could go with this. One is I believe if you're bringing in an early stage seller, they're expecting variable compensation to be a large part of their compensation, especially in an early organization. But that vision thing, I want to latch onto a little bit because a lot of times the other roles in the organization aren't expecting that, right? And how do you indoctrinate them in startup life and understanding that the overall package is more aggressive than you might find anywhere else, even though your base might be X% lower than you could go get at more established company A, B, or C, but your upside is here if you perform. Is that a weeding out process of just saying, hey, there is variable comp, or how can you get people in line with that thinking? Because, sales is going to be variable. We can have that conversation as well, but I'm curious your thoughts on that.
Yeah. I'll take you back to something I struggled with when we were hiring AEs in the very beginning. And one of the misnomers, I almost would say implicitly, was part of our screen, in that, to your point, one of the classic ways AEs look at the problems or look at evaluating companies, especially early stages, what's my OTE? And that's all they would focus. What's my OTE? And I'd hear that like all the way throughout the conversation. All I care about is my OTE. Transparently, I'd tell them, like, especially like when we were passing on them, like and we wouldn't pass them on this for the only reason. It would just be more symptomatic of like something that they're missing, which is it's not the only thing that matters. Don't get me wrong. I get it. It's a metric that can help you baseline against other companies and what you're looking at. But the smarter AEs that actually are hitting the notes are the ones who are saying, I want to know actually the percent of attainment of the team that's hitting quota. I want to know, like, what is your top performers? How much are they making their W-2? I want to know my equity package. And there's a story I could share on that one in a little bit. I want to know how the comp plan works. And, pipeline conversations, what does that look like to be able to hit the target? The reps that understand and ask those questions, I've always been impressed, and it correlates to success because those reps are asking the right questions. It's not just OTE. You can have a very generous OTE, but a crazy high quota, and you're never going to hit your OTE.
Yeah, I mean, OTE is made up.
That's right. So it's an important factor, but it's one of, just like a lot of things, it's never a single bullet. You have to actually look at the bigger picture and be like, look, what are the different pieces behind this? What's my confidence that I'm going to be at quota? And if I'm not going to be beating quota, that's when these numbers start to feel real. But that's not even the bigger picture. I want to know, how much can I really be making here? And what's the pathway to looking like to hitting that? if I was a top performer, am I going to be just marginally paid or am I going to be crushing it? And that's when it becomes really interesting, because what they're probably implicitly asking is, how much is leadership putting together a really thoughtful program versus, oh, let's just chase OTEs. And I guarantee you, like, if a leader was just only simply saying OTE, they're probably not thinking about these other programs, which actually, not saying, you know, a bad or like that's a bad company to join, but more of like there's risks there. They're not thinking about all the different things to make this a great partnership, which I believe is like the starting point of a, employee manager or employee hiring manager relationship.
Well, that gets back to the culture aspect that I think you were alluding to earlier, which is, you know, putting together a comp plan and kind of turning or pulling the lever of we need to add sales into an organization. There has to be some defensibility behind the path to success there. And, if you're out there, kind of flipping the role, like if you're out there looking for a job and you're evaluating, something, beyond OTE, but like, has this organization really kind of mapped out what's happening today, what could happen? Because there's always going to be a leap of faith that you have to take when you're bringing on reps for the first time or expanding a team. But have they really put some thought and effort into that? And why is that defensible? Why is the market right for that? Why will this territory support, success and so on? That's a critical aspect. And to your point, I think a lot of folks spend the time that is really due in that area.
1,000%. And I get it. It's hard. A lot of these AEs, I know there's different career paths. I know there's, they come from different backgrounds. So sometimes, candidly, it's hard. Where like a podcast like this could be helpful. It's like, hey, I want to be thoughtful. I'm not going to guarantee you're going to get all your answers, all your questions answered with, especially an early stage startup. These are hard questions that they're probably even figuring out themselves. But I think the companies who are thinking long term, thinking, look, we do have to have great, thoughtful questions because we want the employee experience to be profound. We want people to stay here. We want people to crush it and kill it. That's when these things go well.
Okay, so agree with all that you were saying. I love the intentionality behind it. And I think that works at a mid-size to a larger company. And it should work, and they should be doing that. It doesn't work at a startup because you just can't think that long term. You need to get things going now, and you need someone in seat. And how you're going to incentivize person 1, 2, and 3, it's going to be quite different than how you incentivize person 5 through 10 and so on and so forth. And so kind of circling back to the founding AE, or just even the first couple ones, and you mentioned like equity packages, like that does have to be something in play there. For sales rep 5 through 100 should not have an equity package. And I feel strongly about that for other reasons, unless the whole company's getting one, right? It shouldn't be part of the initial package that a sales rep gets because they're the ones that are highest paid and getting variable comp, and they kind of control their own destiny, et cetera, et cetera. So kind of going back, like how do you think about, or how would you advise early stage CEOs and founders who are trying to bring in those first couple reps, who want to have intentionality later on in the way that they compensate, but they need to get those first few people in the door?
Spicy conversation. Look, I know everyone has their own belief system on how they think about equity packages. Not going to say, again, right or wrong, or what's the method to the madness. I think you can make a counter argument that anyone early stage should be getting a form of equity unless you are paying top of market or not top of market, but representative market for that comp. I usually don't see that being the case, though, in early stage companies, correlating with how much cash they've been able to raise, their sensitive burn, there's a lot of risk. And so usually as an AE, if you're going to hire, people who are a little bit more, not fresh out of college, but someone who has some experience, it's like buying, just like you're evaluating goods, you're like, well, why risk adjusted? Why do I want this car versus this car? Or why I want this experience versus this experience? When you're an early stage startup, candidly, you don't have a lot going for you unless you're one of these like 9-month-old AI startups that's already at 250 plus million in AR. Okay, then you have probably fair to say like let's carve those companies out and say like that's a little bit of a different beast. For more the run-of-the-mill startups where candidly you're a year old, flip the script. Like, why should people join that early stage company versus, let's just throw it out there, like a Workday or a Salesforce, where you're going to have a lot of resources. You're going to have a lot of you're going to have a brand to sell behind. You're going to have a coach. You're going to have everything's just going to be dialed in, and the risk profile is going to be very low. So that to be even on that playing field, there's only so many dimensions you have because A, you don't have a brand, right? You don't even have a product. You're just too early. So you're going to have to say like, look, we're putting risk on the table. You are going to be accepting more risk. We can only pay you so much. The only other dimension is, look, you can work with founders and you're going to get that experience. You're going to be building. But again, like not all startups work out. I think it's like 1 in 100 they get past the seed stage. Their game rooted in failure, candidly. So to make it worthwhile, equity becomes a part of the conversation. And especially when you're trying to make a perspective, we want you to be here long term, ideally, like more than a year at least, and doing things correctly, meaning don't just sell the daylights out of the product without thinking about, are these the right customers? Help us think long term. Are to Justin's point, are these the right long-term customers for us? Because I've seen time and time again, we can make the sale, but that company may be like a really terrible customer that then hurts the business, that then hurts the long-term prospects of fundraising because now churn's not looking good, or you're confusing the ICP, no one knows who to go after, and you made the game harder. So I think having people have that vested interest that, yes, long-term incentives align, we're trying to build a business together and we want you to share in that journey. That's to me the equity trade-off of why that's. But again, I do that methods to the madness to the stuff.
Yeah. I'd argue that uncapped earning potential would be the highest motivator for someone to come in early stage sale, because you're the first rep, you've got totally greenfield. Well, you don't get capped on your earnings. You can go sell to anybody, right? And like, because they're still trying to figure out their ICP and dial it in, right? But like, at least in my experience, that's what I've seen work. Because if you're saying 1 in 100 and even 1 in 1,000 and 1 in 100,000 actually go to an exit, like a little bit of equity for a lower OTE is not really going to help motivate me to do that, because that's a long-term play there. And I'm trying to see how much I can grab at the beginning. I mean, that's just me personally.
No, I can see that too. I think more often than not, I see people already doing those things. And so I kind of look at it as like, it's not either one. I actually think it's a combination of both uncapped earnings. I think the hard part though is goes back to risk. Like if you had to answer this question, look, I'm going to put together a comp plan. You're going to be a founding AE. Their question, which is rightfully so, how do I know I can make these numbers? And candidly, like as a founder, like it's going to be really hard. Like I could put spreadsheet math together and say like, well, look, if we could bring in this much pipeline at this average selling price and this conversion rate, like, and this type of sales cycle, you're going to be crushing it. Yeah. Like I see enough spreadsheet math from founders that like, I mean, you guys probably see this even more than I do, but like, if they were so accurate at predicting these numbers, and they probably shouldn't be founding companies, they should probably like, go in to play the lottery or, doing stock market picking. More often than not, there's so much risk there that I do think it's a combination of both to hit the nail on the head.
John, I didn't know you had such strong opinions on seed stage equity.
Well, I guess like in my experience, like the sales off model came from the David Cummings model. David Cummings gave no one equity at Pardot. Not even his co-founder got barely any. So David had 95.5% of it or something like that, even at exit. So like, and they ran a successful business, had a successful thing. And so at that point in time, and maybe it was a culture of Atlanta or in the Southeast tech scene, it was that you didn't get equity until you earned it. Like no one in the company got equity. Like the whole company got equity when we were at like our Series C. But like, and then the AEs didn't get any of it except for the founding AE. So like, and we ran off the whole of selling the dream. And maybe Kyle was really good at selling it, right? And he was. But that's how we got all those people in there. And so I kind of feel that same way.
It's kind of where I was.
Yeah. Well, I was going to say, I've been around long enough where I've seen like that methodology, and I come from private equity. Like I'm very familiar with like even, 10 plus years ago, it was uncommon to be giving out equity unless you hit a certain level at the company. So if you were like, I don't know, entry level in accounting, like you're probably not getting equity, candidly, at least back then. I do think there's this powerful message, and look, this is just the philosophy I subscribe to. I'm not saying it's right, just throwing out there if any founders, find it helpful. You want everyone putting everything that they can to make sure we're building the right long term. I find it really helpful, partly through accountability, which is like, yes, like I'll kind of share a story that I think is very powerful and is given to me by the VP of sales of a now very, very, very successful company, but back then was much, much smaller. Now, granted, I get it. He's a VP of sales, so level's a little bit different, but the belief system is actually something I believe behind. And his words were, I'm not doing this job, and I'll take out the swear words. I'm not doing this job for my W-2. I'm doing this job for the equity. And if I do the things right that build the right long term, we all win. Now, I get it. You're right. Like entry level, are they thinking the same way as that VP of sales? No. But when it comes for accountability and we're working with employees, we're as a small company, everyone's in the same room and we're talking about the vision. We're talking about how we got keep thinking about the ICP. We got to think about process. We got to think about, feedback for product to make sure we're building the right product. It takes people doing above and beyond to help put that all together. It's a hard game. Again, the odds are stacked against you and you want everyone doing a little bit more to help build for that long term. And so if someone is not getting equity, candidly, there's no long-term built-in incentive. The incentive is literally to sell the daylights out of the current quarter. Whereas if you gave them some equity, hey, look, dude, we're all in this together and I need you to help build this company as well. Now, again, I think that there's a nice messaging track. It'd be interesting to see the studies like, hey, what ends up happening between the two? But I think it's both the case, at least my own personal philosophy.
Well, yeah, I think, probably for me, the most important thing that we just talked about there actually is the philosophy, meaning like, does the organization have one? And do you identify with that? Because I can speak to the exact opposite situation, like my last go round. And in fact, you work with one of my former employees, which is Cassie Coke. Like our employees owned 50% of the company by the time it was sold. The really interesting case study around that is the folks who optimized for that from the beginning. They were probably there because of that. As a good number of folks were there because of that. And the folks that optimized for that and said, like, I will forego a raise to get more and so on, like, were the people that got the absolute most out of. And then, really interesting on the other side, the people that didn't, it was just a very inverse behavior that you saw there. So, but I would say like just having, we call it culture, we call it all these different terms, but like having a philosophy in an organization that's palpable and that you can identify with. I think that's ultimately where that notion of fit comes from, which tends to be so fleeting across a lot of startups.
I completely agree, by the way. This goes back to the earlier point. I don't want some founder to be like, well, Mark said, I'm just going to apply that here. It just feels meaningless, not intentional, not really thoughtful. John, you could be completely right. Someone could say that and like, I'm just going to copy what Sean says. The whole part is what's the vision? What's the belief system? What's the philosophy for the why? That becomes the motivating factor. Going back to like, just like one comp plan can't do it, but a belief system is very powerful and you could shape it either way, but you have to be consistent behind it. And I think what all employees want is like, I want to see that we're living up to that. If I'm going to not get equity, I want to know we're paying an aggressive top market. I'm going to be making a lot of money. And that's how we're motivating the behavior so that I'm following through on my actions in the day to day. Or if I'm getting equity and the story is like, I want you to think long term. Okay, got it. Like, are we believing that? Are we, am I being rewarded? Is my opinions mattering or am I just being written off? Like all these things kind of start to become amplified by the behaviors that we show up every.
Yeah, but it's the different layers.
Sorry, I'm pro making owners of the business. I'm not necessarily pro giving a bunch of first-time sales reps or early-stage AEs after you're founding one a bunch of equity because they've got the variable comp. That's my only. I think everyone else should have it.
Yeah, I think there's a lot of levers in incentive compensation, right? We obviously think about the dollars and cents or maybe the equity package or whatever that may be, but you think about the companies we invest in are pretty early stage, right? They found some early traction. They've got some revenues. They've got some customers and they're thinking about scale, right? Maybe they're not scaling things accurately, but there is this concept of incentivizing people to build and be a part of something and learning about the bigger pictures of the business. And to me, that was always a thing that I cared about, right? Like obviously cared about making money, cared about big picture and things like that. But there was always the bring me into the business, right? Like sure, my job is this thing, but bring me into the business. What's happening behind the scenes? What are you thinking about? How does this play out? If we do this, what happens there? If we do this, what happens there? And I do think there are a pretty strong cohort of people, especially those cowboy-like folks who are trying to, be different and who can stomach a startup. Because like you said earlier, if you've got the stomach for a Salesforce for a workday, you don't have the stomach for a startup, right? Like those are two diametrically opposed types of things. So a lot of those folks who are willing to take the risk for a startup can be incentivized by a leader who says, I'm going to bring you in. I'm going to teach you about the business, what's going to happen there. And that could be a lever in itself, right? That ties in with some of the other things, right? It's a sprinkling of all of the things.
Yeah, 100%. And it's a powerful, like, if there's anything I learned in, being like running a business, like, what are we all trying to do? We're trying to get outsized performance. It's very, very hard. Going back to the name of this podcast is a cheat code. And I'll give you a quick example. There's a AE that recently, early employee. So Jean, to your, like, I would consider him to be a founding AE because I think he actually was like one of the founding AEs. He's still with us today. But he did join another company and then came back. And what was a big part of it? There was a belief system that I was putting in place. A bit of it was back to what it was like in the beginning, more founder involvement in the front lines. We're going to be working together, problem solving. And then there is this implicit level of trust that, like, look, like, I don't have all the answers, but we're going to be just like in the beginning, we're going to workshop the stuff. We're going to chunk it out. And then also I'm going to make sure you're taken care of appropriately. And we're going to be doing this, like, we're going to have fun at the same time, but we're also going to solve problems together. And we're going to do this as a team. Like, any new person would be like, Mark, I get that. Like, I hear that a dime a dozen. But there's something powerful of this level of trust that's built over time, following behaviors, following the belief system, and saying, like, I trust what's going to happen here. And look, the same person who just came back, like, record time closing an enterprise deal. Like, it's magic. It's incredible. It's really, really hard to build a successful org, but when you find these gems of, like, behavior unlocks, which is what comp's partly supposed to do, man, it's like magic. That's why I think rally calls like high school rallies are so important, or being tribal is just a powerful measure for getting outsized performance.
That's the other side of the coin as it relates to comp. Like, again, I always come back to culture because, what you want to design in an organization, you can say on day one, but it really is how that manifests on all the days in between the certain and the hypothetical finish. And, like, how you behave when that plan succeeds, I find is, another great test of what the true culture of an organization is, or, how that evolves over time. And I think we've seen, in the early stage, certainly, like, some short-sightedness where it's like, hey, revenue's zero or near zero. Like, who cares if we pay, X 20% all up front, you're, in perpetuity. And then suddenly you see someone sell the deal that you never thought you would have as a customer, and things start to kind of change and shift. And I think, in terms of your business, that's where things get really interesting, because comp has been historically this thing that always happened behind a curtain, and you just kind of had to have that implicit trust that things were calculated. Maybe tried to calculate on your own, probably couldn't figure out how it worked anyway. But, I think that's another tool to reinforce what you're trying to build there, which is just ultimate transparency. Like, hey, you can see not only how you're performing, how other people are performing, to the point earlier, the historic performance. I think those are things you have to invest in right alongside that comp in order to uphold that agreement that you're ultimately looking to form with a set of folks.
Yeah, absolutely. I mean, like, one thing that I found really interesting is, like, a unique insight behind the space is, and look, I'll put it on the table, some things maybe I just take for granted. But to your point, like, you would think the ops to Frontlines relationship would be like an easy one and a very, like, harmonious one. Part of when we were early in our journey, I was surprised how many reputable companies you would talk to, where you just get different sides of the picture, but what they both agree with is there's a broken relationship between ops and the front lines, and even sometimes leadership. And it can be very paralyzing in the sense that, and I tell this when I go to dinners or like when I go to conferences, one of the biggest dangers is when someone's in a room by themselves figuring out the comp plan without any collaboration. Like that's actually very common even to this day, where someone in ops is like, I think reps are getting paid too much. And here's like the spreadsheet math of what it needs to look like. I don't think they should be getting paid this much. I don't even believe they're going to get to quota, blank, 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 blank. They push out a comp plan without buy-in. And then are they surprised quarter, 2 quarters, a year later, they've got a lot of turnover. The worst thing is their high performers end up leaving. The trust is broken. And if you talk to both sides, especially the thing is like, I go back to like, no one wants high performers to leave. Now, don't get me wrong. Like sometimes they could be like, they're not a great cultural fit for whatever rhyme and reason because something happened. But for the most part, like that's a bad idea. And if you talk to them and the thing that you're hearing is like, I just feel like I wasn't being told a straight story. I was told this was a great comp plan. Dude, I could do the math. Like, this is way worse than last year. What's going on here? And it's unfortunate, but that's probably one of the main reasons I hear when people are asking for advice and they're looking for like, hey, here's my problem. This relationship's not even a good place. It's like a bad marriage. It's like, we could talk about solution for a second, but it comes in tandem with a belief system like, hey, like you guys need to kind of also work together, collaborate together, but also understand like where you guys are coming from. Together, when it's done well, we can design a comp plan that gets the right buy-in, that everyone says, I trust what the team's doing here. Let me execute now. And, the numbers are going to show up. But when that all isn't happening, now you have people shadow checking comp plans. They're checking their own comp. And then they're getting told in LinkedIn messages, hey, we've got a great, company alternative. Come join us. We've got reps killing it. Yeah, they're going to start picking up the call because, man, this is kind of a headache. It's stressful. I just want to sell. I don't want to not have to think about trust. It's really unfortunate. But I do think a system can help start to be a piece in that journey of building a very harmonious relationship between ops and the front lines. And then, our biggest value sell is we want the front lines to be focusing on closing, spending as much time with prospects and or customers, depending on, what roles you have them doing. But the more you can all agree, like more time there versus less time checking or being paranoid, all the better for everyone.
Yeah.
I'd be interested to get your take on that, just in terms of the trust formation factor, because you spend a ton of time in sales. Like what are the red flags there? Like what actually builds trust in the fact that a plan is going to perform up to the, unicorns and rainbows narrative that you're getting along with it?
Yeah, so I could go a few different directions on that. One is a situation really well, which is, we sold people for a decade, right? So there's not just ops of how you get compensated and the levers that the executive team pulls to compensate people. But when your people is your product, there becomes some animosity in terms of how much the salespeople earn compared to the people that are the product, right? So you're always constantly fighting that battle. And one of the things that I always believed in and then still do to this day is I don't care if I get credit. I don't care if I get a pat on the back. I don't care if I get any of that thing. I'll prop everybody up. At the end of the day, my bank account's what's going to grow, and that's fine, right? I'll take that. I'll praise everybody else for their work and make them the hero of that thing. And that served me pretty well in that environment. I will tell you that years later, since that environment, to a person, the people that were high performing consultants, right, that were the product, they've called me to a person since and said, wow, I didn't realize how hard it was what you were doing. Because in some capacity, what they're doing now is having to sell themselves. And they didn't actually have to sell themselves then. They thought they were. And there's some very specific examples and they would know who I'm talking about if they were listening, and they wouldn't regret it because they
like gone out and like started their own.
They had to they started their own business, been a fractional consultant, been this, been that. Like, oh, well, I was the one selling all this stuff anyway. It doesn't really matter. And then they realized that they weren't, right? So, there's a little bit of that just from that kind of operational perspective. And then there's always, we went through a different type of scenario through M&A, which, you get a new executive team, new thoughts of how people should be compensated. And, it wasn't just the other thing. High performer didn't seem to matter, right? It just seemed to be, yeah, everyone makes what they make, and your salary is what you are, and incentive compensation isn't really a thing. And you would notice whether you were a seller or you were someone who was the people delivering the product, the high performers left, right? It became a, yeah, okay, great. If you don't think I'm valuable, then I'm out of here, right? And I think there is a certain piece of that in incentive compensation is I can show you how valuable I am, and you can pay me for it based on how I perform. And it becomes that kind of black and white sometimes if all of the culture stuff that we've been talking about isn't built around it. And if you don't believe in that culture, and the ops team and the executive team and everyone doesn't like prop up a culture of performance, and it's just like, oh, these guys just make too much money, then it's like, all right, well, if that's what you think, then I'm out of here.
Totally. I think that last part resonates really strongly, and it's something I hear way too often, especially, dare I say it, folks who've never carried a bag. There's almost like, I was in a conversation earlier this year with someone where it was like spreadsheet math, and performance to them was like, year over year spreadsheet numbers. And I'm like, and we were talking past each other because they're like, their belief system is when they get to quota, they're going to stop like caring. They're at 100%. Why would they do more? And I'm like, trust me, like, when they get to quota, it doesn't stop. That's when the not the real behaviors, but like the additional behavior kick in. And they're like, no. And it's like, they kept going back this the spreadsheet math of like, we're looking at blended attainment, and we're going to think about this from like, we're not going to think about the quota piece. And so like, trust me around this, when you see it, I think it takes either having done the job, or you see the behaviors when you see like that one rep, for example, where it's just like bloodlust. Like the moment they hit quota, they just become a different person. There's someone I can already think of, like, when that happened, man, they're like moving heaven and earth to like get everything closed in that quarter. It's kind of ridiculous. And you're like, there's no coaching on how to do. There's no talk tracks. There's no, hey, look at these accounts. The natural behaviors for them to be like, I want to make more money. I got to go figure out where else I can pull in from so they can crush their quota even more. And so again, I go back, I think there's some things that were like, I think sometimes, and look, I say this, I'm a former ops person. Like, I come from that world. And I think too often times people kind of look at things too much like a spreadsheet and forget that there's a behavior here. There's a behavior unlock. And when it happened, it's so powerful. It's so magical.
Yeah, I totally agree. Yeah, I can tell you the craziest stuff I've ever done was not to get to quota. It was like accelerators above quota. It's certainly way powerful when you're thinking that way.
Oh, the interesting thing, Josh, on your example, which is predominantly M&A driven, and with a private equity backing, one of the core reasons, like the core thesis of the deal was like, hey, we want to bolt in a performance culture, which is kind of comical when you think about it. But the immediate thing to, after that, deal's done, now we start integrating organizations, and everything that tangibly defined that performance culture was so foreign and just like absolutely rejected. Like conversations like, don't pay me a base, just show me a plan where I can get to, an outsized earning. And there's no structure for that. And therefore, the body fundamentally rejected, that kind of that new organ, at least from the thesis of bolting into performance culture. So yeah, I mean, you have to be, alignment and again, organizational philosophy, I think are the centerpieces of any sort of performance or compensation.
100%. And one thing I'll kind of share, like it's related, but it's also gets a little bit, widens the aperture, especially for folks when I think about, what is it that we're all trying to say? When you think about incentive compensation, we often think it might just be comp plan. When you zoom out for a second, just behaviors. What are we trying to say? We can all appreciate that comp plans is a part of it, but people are motivated by a lot of different things. We just had an earlier conversation about equity. There's conversations about culture And like, hey, the more I live and breathe this culture, then maybe that's the right behaviors. There's also other things around like pride or career pathing that are incredibly important. Heck, President's Club, which is, I think, is a form of pride in itself, but it's also more of a reward of, having a great time too. But to give you an example, and I don't see this nowadays, but it'd be kind of fun to see this come back. But a really huge example, just going back to like outsized behaviors. There used to be companies maybe back in the 90s and maybe early 2000s where they would give a car away for the best rep at the end of the year. Now, we may say like, that's kind of insane. Like, why would you give like a Mercedes Benz for a performance kicker or a spiff for the year? But it was really powerful, and I'll tell you why. You all can probably think of maybe your top performers in your org that maybe hit President's Club 1 year or 2 years, but it's pretty hard, right? Like even for me, if I go way back, it's kind of hard to remember the right folks for that. But that person that got that car,
That's right.
I say this because I was talking to this SVP of sales who was sharing the story. They're like, that story is like 15, 20 years ago, but I know that person who did that.
Mm-hmm. Right. Yeah.
You just don't forget that. And everyone still talks about it to this day. And there's this element of pride. Like, imagine how cool that would be. Now, don't get me wrong, cars expensive. And that's kind of like, there's a complication of taxes that kind of go a little weird with cars too. And do you even want that car? But that whole pride thing is like such a powerful lever for motivating behaviors that, zooming out, like there's a lot of ways to drive outsized performance. If you just really zoom out, what are we trying to really do at the end?
Yeah, totally.
We had a 2014 911 Targa, and it went to the best. It went to the best rep every month, and they got to keep it for the next month.
Oh, okay, got it.
Yeah,
that's kind of cool.
They did something similar at Marketo.
Yeah,
to the point, like this actually, like comes down to ground level pretty effectively as well. Like 1 year we did like VIP shoes that we designed for everyone. Like people loved that. They talked to, hey, when are we doing shoes again? You know what I mean? It was just like, at the end of the day, I think they were like $300 a pair to like design them and have them, custom made. They were Converse. But like people loved them. So like the things that have a bit of exclusivity and a bit of rarity to them, obviously like people hold that.
Yeah. And it's like, I look at it as like, it's fun, but the big thing is like, it's energy. It goes back to, again, it took me a while to understand high school rallies. Like, I think especially when you're in high school, it's just like, oh, show up here and cheer. What do you think? It's like, there's something really powerful. I think we all agree. It's like energy in the room, this winning locker mindset, something that we're talking about like, oh man, that's so cool. And it actually really hits the right notes. Yeah, that's powerful. That's like, again, magic. Going back to being tribal and, things that, I'll give you an example. What comes up for me. We talk about our internally like competition. You can't throw process at competition. It's just like, that's a really good example where like, okay, like go through the motion. Here's a battle card. Are they going to do the right things? No, like you have to, there's this behavior that you're trying to trigger, just like with competition. Like you want, when you hear maybe a competitor, you're like, light bulb, go off. You feel this intensity. You feel like, well, shoot, I don't want to lose this deal. I don't want to like I hold myself accountable. I don't want to lose this deal and let my team down. That inner motivation is what you're trying to unlock with all the things that we're talking about. And that's, again, magical.
Yeah, totally agree. Well, we're running up on time here, Marcus. So I want to give you an opportunity to talk about the report that you all put out, the state of compensation, and maybe in that, we talked a lot about sales as you typically do when you talk about compensation. But if you did have any findings in there around incentive compensation for non-sales roles, anything that came out of your report, be certainly interested to hear that too.
Yeah, one of the things there's a couple things that I've seen. Having done this report a couple of times, I think it's just really important for everyone to know. We talked quite a bit about comp in this call today, and one thing that I think was a huge theme last year, it continues to be a theme this year, is too often times comp can sound counterintuitive. We all can zoom out and be like, well, what are we trying to do? We're trying to drive behavior. But we've also can appreciate, and we probably can think of situations where we get stuck in the day-to-day, and we don't think about, is this comp plan working? Is it driving the right behavior? How can we measure its effectiveness? Even just from a unit economic perspective, have we seen the change in behavior? So one thing that we talk about in the report is just the strategic nature of the job versus just the day-to-day admin of like processing commissions, which when no one's doing and thinking about it correctly, it just goes in autopilot. What's the point? Then you're really not trying to build something magical. The other part that we talked about in the report, and especially in the more recent one, is incentivizing beyond traditional roles. And I think we've been seeing this come out probably since a little bit since COVID, but always obviously with the market volatility. You know, I had my thesis for the why is, you know, as people believe, hey, look, the cost of labor continues to go up. How there's been this transition, which is, well, how do we take our labor force and make them more skilled, put them with the right behaviors, kind of drive more outsized performance versus quote unquote throwing people at the problem. So I think that part of that transition has been, well, are they aligned to the behaviors that we want? And as we all know, like people want to be rewarded for their hard work, or at least financially rewarded for their hard work. So you're seeing a lot of experimentation and people, including different parts of the org, to be sharing that upside. And I think when done well, goes back to this magical moment where the team feels this energy, we're winning. There's a winning locker room, and you now have everyone contributing and doing a bit more than what you would expected when you first when you think about the job description. Now, I will also say conversely, it's hard. It's a hard problem, and I would advise founders and leaders out there, easier said than done, and you need a good, thoughtful team behind it to help make sure you're designing programs thoughtfully. Because when done poorly, it actually could add a lot of operational burden to your teams. You may find flexibility starts to become hard. Hey, we were flexible in this deal, but now we've got these comp plans that actually make us more constrained. I oftentimes tell people, like, look, you have to be very thoughtful to this stuff. And it's sometimes almost comically feels like an afterthought for folks versus like, how can we see it done well? And that's where some of the report goes into, well, do the people have the right seat at the table to know business context? What are we trying to solve for here? But also, can we make this simpler versus ops goes into a room, comes up with a comp plan without buy-in, or, it increases a lot more friction down funnel. And should we be surprised? We're not closing as many deals with this creative plan.
Totally. Awesome. Well, Mark, where can folks find the report? Get it downloaded.
Yeah. So you can head to our website, CaptivateIQ.com, and we'll send a URL afterwards, but it's CaptivateIQ.com, resources, Captivate 2025 State of Incentive Compensation. Or if you just go into Google.com, you can just find CaptivateIQ State of Incentive Compensation. You'll see that report, easy to get to, but we'll send, I believe when we send that recording, we'll put a link to the report.
Yeah, we'll get it in the show notes for sure. Awesome. And if folks want, so CaptivateIQ.com for the company. If anyone wants to follow you, best place to find you?
I'd say LinkedIn is a really great place. You'll see me posting a lot of learnings, conversations that I had from talking to customers, prospects, or just, recent things that I've presented on at conferences. I do post quite often, both my personal opinions that may be related to just general running a business, but also on the topic of incentive comp and sales planning.
So check out Mark Schopmeyer on LinkedIn, go to CaptivateIQ.com, look for the State of Incentive Compensation report. You can find that in the show notes and on Google. It sounds like it should be pretty easily accessible. Mark, on behalf of the folks here, we want to thank you for joining the show.
Thank you for having me. It was a great conversation, Mark.
Thanks, Mark.
For those of you listening, really appreciate if you subscribe to the show. That helps us boost our listenership. If you feel so compelled, please leave us a review. That also helps. On behalf of Justin and Sean, thank you for joining another episode of The Cheat Code and Friends.